What's going on, guys? Welcome to this video. So in the first video of this section, we're going to talk about moving averages and EMAs, or exponential moving averages. Now, these are simple indicators that can be used to make day trades, and I know a lot of people who are making day trades using exponential moving averages and they make a lot of money. So it's a very powerful strategy. It's a very good strategy as long as you actually follow it thoroughly, and you're not scared to make trades. Now, what is this? So exponential moving average, obviously, and moving average are two different types of averages, essentially averages of the chart. Now, the way this is set up is that it actually looks at the back and looks at the length of the chart. For example, how many candles it can look back, and it kind of smooths out the chart. Essentially, that's what it is. Now, the idea with this is that if you have two lines that are set up correctly in different timelines, when these two lines pass each other, that usually indicates a change of direction. Okay, so look at this. For example, I have Webull in front of me, right? This is my setup on Webull. This is what I used to use for day trading. I'm not doing it anymore, but again, it's a solid strategy. This has made me a lot of money as well. Again, there's nothing wrong with this strategy. It's just that it's something I don't use anymore. But the idea is the same. So take a look. We got two lines, MA or moving average, EMA or exponential moving average. So the idea is that when moving average, the simple moving average essentially, is going, like, you got the simple moving average, or MA, right? And then an exponential moving average passes through the simple moving average. That is an indicator of an uptrend. You see, guys? And as long as this thing is right above it, as long as this thing is right above the line, the exponential moving average is right above the moving average, this is an uptrend. Right? So that's how this whole thing works. It's a very simple strategy, but very powerful, so it's pretty simple to set up. Like, for example, on the Webull, you just go to indicators and get moving average and exponential moving average. On TradingView, if you're someone like me who uses TradingView, you can actually set this up as well, but you just have to change the numbers. Let me show you how you actually do this. So let me just delete these. So again, for MA or moving average, you want to go 100, and for exponential moving average, you want to go 25. Okay, so exponential is the small one essentially. So right here, when you open a chart and choose the asset you want to trade, you want to go to indicators and you want to look for moving average. Okay, so the first thing you want to choose is moving average, the simple one. That's it. And the next one is moving average exponential. It's pretty much the same thing. So you just choose both of them. Again, so now next thing you want to do is you want to set these up. So right here on the left, so the first thing you want to set up is EMA. So exponential moving average, again, this is the short one, and we're going to set this up, the length, for 225, right? There you go. Now, the next thing you want to do is actually you want to change the color as well. So, like, in this case, for example, if you take a look, let me go back to Webull. See, guys, when the EMA essentially is the one that we got to pay attention, so that it's trend, right? And we have it on 25. So I'm just going to keep this on blue, but MA, which is the moving average, we're going to keep that on 100, and also we're going to change the color on that one. So let me go back here. We're going to go to MA, right? Again, settings, MA. And then I'm going to change the length to 100. And then I'm going to change the style to maybe red. Okay, so dark or like light red. So that way I can see, right? So whenever, essentially based on the strategy, whenever this line, the EMA, goes right above the MA, that is an indicator of an uptrend. See, guys? And when it goes right below it, that is an indicator of a downtrend. So essentially, in this case, I would enter immediately in the pre-market, okay, and just ride this continuously up to here. It's a very simple strategy, very powerful, and it works very well. Now, one of the things I want to tell you, like very important tip, is that situations like this, so as you see in this case, for example, we had the line, or the exponential moving average, like go right over the moving average, the simple moving average, in pre-market. This is pre-market, this line right here, right? Now, if this happens, I don't recommend taking a trade. So generally what you want for a confident, better, like for a confident decision, and if you want to make sure it's accurate, you want these lines to go over each other, during the market hours, because usually a lot of things happen pre-market, and that's like why I sometimes I don't trade for the first 30 minutes, because I just want to let the market settle. But the first like 30 minutes usually, or pre-market essentially, you definitely don't want to touch this. And if this strategy kind of applies, you see the EMA going over MA, you maybe want to stand out, you maybe want to wait. Okay, so that's just the point I'm trying to make, is that just be careful with this, because this can be misleading a little bit. Okay, so let's go back the day before. So again, we got pre-market, all this shenanigans happening, and then after market, there you go. So like when the market opens, we got the EMA blue line going right down below. Obviously, this is like when you exit a position, and then it starts recovering right here. Like let's say after it passes the line, you enter right here. Now this can be a little bit scary. That's why you got to be a little bit confident with your trades, because if you enter right here, essentially what is happening is that you're going right down immediately after, and it can be really stressful. It can be really stressful. So you want to make sure that you're confident and like you understand the risks here. So like if you would write it, obviously hindsight is 20/20, as I said, but if you would write it, you could go all the way maybe up here, and you would just kind of get stopped out here because you saw this. But like you would essentially enter right here, right? Like maybe right here, 1684, and then you would exit 1728. That's not a bad trade at all. That's like 50 cents. So the point I'm trying to make is that it's a pretty interesting way of trading. It is quite powerful, and it works if you use it continuously. If you're not scared to like take some risk, it works very, very well. And if you're not scared and you don't jump out the moment you see it goes the wrong direction, you can make some pretty good money out of it. All right, guys, so just want to point this out. Let me know if you have any questions, guys. I'm always here to help you out, but this is a pretty good strategy. It's a pretty good beginner strategy. I recommend using this in paper trading and kind of getting used to it before you actually go use it with real money. But it's a pretty solid strategy and can be very powerful if you master it. Thank you so much, guys. I'll see you on the next one.